Welcome to TradeTheNBI.com. This is John. This report is for the 16th of March, just before St. Patrick's Day. Oh no, that all got canceled. Why? Because of the epidemic, the pandemic, the worldwide calamity. So, we were cruising around. I was nice and short here. We were, on Thursday, and we dipped down lower. I was talking about going down to my 2320 range, and then President had his news conference, laid out exactly what they were doing, brought in all the business people. They announced the Fed's actions of, what they were all going to coordinate together, make sure testing and everything. All is beautiful. I thought it was cogent, put together, amazing that you could get everyone to get together to do that, to help the country to try and limit the spread of this situation. But, as I've pointed out, this is a massive supply chain disruption, and even doing that and this, providing unemployment benefits, everything else, that doesn't change the fact you went from an economy at 100% to, well, I don't want to say zero, but maybe 10 or 15% of what it was. That's a shock that is going to reverberate, and we're going lower. So this, to me, was an opportunity that you could attack these kind of bounces, because I, immediately said to myself, well, I better go check the daily. With that kind of move, limit back up here, it was a huge gain. No, there was no change in the short signal. We still have orange caught between cyan and red, and you still have green falling, shake out lower. Yes, you have improved extreme histogram, but overall that's still a broad negative. You look at the historical elements of it, and this is tracking sort of like what 1929 did. When I talked about that to some of my friends about, they do it being potentially depressionary if they don't act swiftly and do quite a few things. Now, throwing money at the market and adding liquidity is one thing. That's not going to solve anything for the disruption of workplace situations, debts, people's normal living. You can't just shut everything down and think that you're going to be, not in a recession. So that's thinking behind that, and of course we still have the values here. The algo level 2635 here, 2505 down, and we blew through that the last time. And then of course I had my other one that was down lower, but I think I deleted it when I was getting rid of a lot of extra lines, because it was getting so heavy on the chart with all the lines. I just wanted to make it cleaner so it'd be easier to see. NASDAQ likewise, well, we didn't break the 38%. And this is what I kind of look for when I'm looking at short situations anyway too. When you start to break down, and I see then the Fibonacci lines, particularly on the lows falling. If my highs are staying the same, I'm expecting that price is still going to be going to low. When the lows, when the highs start falling and the lows are solid, I expect price to be pulled up to them, and that's something that we see on a consistent basis over and over again. And it's just a matter of following DSC readings when that happens, and then you can engage from there. Plus, you got to beat that 38% from a short standpoint. Sometimes they can push to 50. Doesn't happen a lot. The euro, well, they're going to try and bounce this back, but the euro, it's destroyed. You're going to have to go to the U.S. reserve currency. So the fact that they had pumped it, all we did was, start to head back to filling the positive extremes. I still expect those to go. Fine, the market is, I think, the limit down right now, pre-market for Monday. No shock with that, because again, at the end of the day, even Goldman, they took their GDP numbers. They were suggesting 0% for the coming quarter. Now they're saying negative 5%. That may even be generous. You've never had a cataclysm like this. It's rather unprecedented, particularly since you're having a voluntary action across the nation of people limiting activity in that, and it just has broad implications. It's necessary, but I've always said it's not the virus that's going to create the most damage. It's the fallout, but you can't let the virus run unimpeded either. So it's a no-win situation either way. Oil, the U.S. is going to buy up the reserve. That still may help oil, because they're going to buy a lot of oil, and they've got the money to do it. It's one of the few things that they can actually do that I suggested they should have done it a while ago and announced it, but this is the thing. You're always a little slow on these things. We're already a little too far in with the number of cases before them mandating lockdowns. We've already seen that exponential growth factor, and once you get past the 5,000 case mark, it gets really difficult. And this is where even the CDC had recognized there were certain areas already in America, in New York in particular, in that where you'd already exceed the ability to contain. So their hope is just to reduce the number of infectious rate so that you don't overwhelm hospitals all at once, because that is the nightmare that's happening in Italy right now. And it's devastating because you're just seeing people being literally turned away or not even taken to the hospital because there just is no room. People are in the hallways and that. And this was a top tier in the north there for healthcare. I mean, it exceeded the U.S. And it overwhelmed them so fast they didn't even know what to do. And you know, the psychological impact on the nurses and things like that, choosing who's going to live and die, is devastating. I mean, this is wartime footing, and this virus is the enemy, and unfortunately, you're in wartime situation vis-a-vis that. Now, this mass liquidation, while it's bullish for gold in a broad sense, you reach a point where it becomes deflationary, plus people had to liquidate positions to cover the situation that was taking place in the market. So this now flips from what potentially was an inflationary period before into depressionary deflation. So that's the reality of it. Well, the day was beautiful on Friday as far as trading goes. We just had some beautiful action. I mean, we had the slow decline that was going through, then we ended up with a nice bullish P2, which is that double pivot here. And then beautiful part of the pivot, and I always love to watch this, is where you take this top portion of the top pivot, and as soon as that red DOC does it, when you get it with the crossover in that, look at how perfect that entry is from that standpoint. Then we talked about this because within that kind of buildup, and you get this solid rising DOC red, you get that typical ABC pullout. And we were just talking about this one because on the Skype chat, we were discussing the magenta shakeout right here. When it gets over that plus 15, we're a little leery on shorts. You can still take them. Don't object to that. You just recognize that you've got steel reset as soon as it crosses. It's usually an indication where it's ending, right when you're about to get that BK signal, and that's just because of that magenta being over, and that created the next wave, which was, of course, lower, and I started indicating, hey, these DOC spreads would be much nicer to take. Not perfect. Ideally, I would have loved to have seen steel come above cyan and back below. So it was one of those where, okay, start a little bit here, add a little bit more on the second move when it starts to separate from green, and then follow to see if you get carried through. And once it breaks below the APM yellow, you're hold free from that standpoint. So what you're seeing with these numbers here, this is that no steel reset, where what it does is once it crosses red right here, it begins to count down 15 bars. And at that point, you've effectively reached a point where you've got no steel reset from a trend standpoint. And then, of course, once the steel does reset, so do the numbers. So once it began again, that came right at this particular point. We had a nice little short setup within this configuration, dipped below the red line. It made it lower low on the higher histogram, and then boom, it was an immediate turnaround, and we went to positive shakeout. And so even if you had that short, you would have had to cover that baby, and that's when the market just exploded. And that was right off the president's comments, because everything he was saying was spot on as far as dealing with the virus. Some help financially, but not nearly enough. And even the Fed's 1.5 trillion liquidity play doesn't change the fact of what's happening to real people. And all those big companies that he had sitting next to them literally are going to start reducing their hours as their supply chain. And this is, we already saw this happen just a little bit later this afternoon on a Sunday evening, Walmart reducing their hours, and that because they're not going to be able to restock the shelves. And for that matter, most of the shelves in stores across the country have now been stripped barren, and there is going to be a significant time lag, because as I was talking to you about from my Italian suppliers, there's nothing out in the water that's going to be coming in to be supplied. So if it's not a domestic product, yeah. So, okay. And sure enough, market opens. We'd already got the short signal before the market closed. We had the little fake one right here where we were coming up with the rising steel. The one before that on this first BK, magenta was well over the plus 15, and then breakdown started after you got. Then this is what I was talking about, that nice ride. Now, of course, we always talk about cyan under red, always buy. Well, this is that exception that I talk about briefly, but you have to recognize it's a bit riskier play and not always ideal. But sometimes if you're really high up and you've got a lot of positive extremes, and we had positive extremes all the way back to right here. So you're looking at somewhere down in the 26 range, and we're almost at 27 at that point. I like that risk to reward standpoint. Stop a little bit above the highs, above the 100% here, and you see how it goes. Then we ended up with the DOC spread before the close, and that worked out pretty well. I was actually fairly happy with that, and I put it in a pretty decent position because we had the series of algos. We had the 87, then we had the 75, and then once we broke below the 2660 there, I was like, okay, hey, I'm fine with that, and I left that for no idea that we were going to open limit down and fill the positive extremes in one fell swoop. But hey, if you position right, sometimes really good things go in the right way. And this was the same thing that I was doing up at the 30, from the daily standpoint when we were looking at that up here at the 33, when we had the breaks, and it was like, okay, the first one started, it was like, okay, it's not bad, it's looking good. It's like reasonable to go ahead and start to create it. And then once we broke the ABM yellow, it's like, okay, you have to take that trade because this is everything you look for in a short. And you hadn't had the steel reset below red at that particular point. It was kind of exciting at that one. And so when it decayed, I was very happy with that. Took it off, of course, when we were talking about then wanting to day trade in between that. But it was still worth, hundreds of points. So this is not anything super duper by any stretch, because that early trade was a fantastic one. That being said, I'm not going to object to this one at all. Is it very possible that the Fed intervenes early on before market open and tries to pull this back up? Absolutely. So I already posted on my Skype chat that I had covered a portion of it and set stops because that can happen. We'll wait and see. The market potentially reopens after the pause period. And continue to drop. Or at some point, I would imagine in the pre-market or European session, we may see some activity through central banks coordinating together to try and prevent a depression-like utter collapse like in 29. But that's going to be about the only thing that can save it, or some other kind of halt measures. But we're still at 2,500. I mean, this isn't exactly like we've dropped to, multiples like we were talking about during either even the 2008 and stuff. I mean, if we get down below 2,000 and start getting towards 16, 1,700, then we can say that, you've reached a point. But, when you're talking about changing EPS and what their earnings are for all these companies, a lot of unknowns, and that's going to cause a lot of people to be slashing estimates and doing all sorts of crazy number work. So that's going to be for the future. I'm not going to worry about that now. All we can do is go with our signals, and they were pretty clear. So that's the long and the short of it. As always, though, I will keep putting info up on the Skype chat. Trade well. We'll talk to you later.